Hi, I'm Phil Grant at philsgang.com. This morning I did a short version of what I'm doing right now, and I promised that by the end of the day I would also add to that short version, my YouTube channel, the long version. So I hope you enjoy this as well. If you haven't seen the first one, please do that first. Very short, about a minute, and then add this to it, and you're going to get an overall view of what's going on. What's going on? Hey, let's take a look at last Friday. Are you kidding me? Let me show you something. Last Friday, what did we see? Panic, pure panic. Now, what do I mean by that? Well, we saw in the market, if you recall, we had a situation where the market was about ready to break through the 250-day moving average right here. See that? For 5 weeks straight, the market was going negative. As of last Monday, a week ago, that was the start of the 5th week that was going to go negative. Why? Well, the problem with the market is we have terrible inflation. When you have terrible inflation, you have a strong dollar. When you have a strong dollar, everything goes bad. But here's the important thing I want to show you. So here we were on Monday, right here. See Monday right there. So the market opened up down negative. Oh, okay, that's one day. Tuesday, market closed negative. Wednesday, market closed negative. Thursday, here, right here, Thursday, market, oh, it's ready to break through the 200-day, and it's going to break through the 50-day. And what do we know about that? Well, we know that the hedge funds, if that happens, for every one stock that someone buys, hedge funds are going to sell 25 to 30. It's going to be worse than the 2008 crash. Going to be worse than the Enron crash when they broke through their moving average. So Powell panics. He can't have that happen. So what does he do? He decides, well, we'll rig the market. We're going to rig the bond market. Now, this is very important. This is what they do right here. This is the chart, the 10-year chart right here, okay? 10-year treasury, see it? On Friday, they started right here taking the yields and artificially pushing them down. That's right, they can do that. The Fed can do that, push those yields down. And then the market on Friday started to rally up 375 points. I told my members, do not buy those stocks. It's not going to be sustainable because of the fact that we have, this terrible inflation. We have margins that are shrinking, sales are slowing, earnings are contracting. I can go on and on and on. Now, so we closed on Friday. Everybody's celebrating. This is it. And the TV, people on TV, those dopes, telling them, this is it. Bottom's in. We're really in good shape now. This is it. Rates, no more rates are going to go. Rates aren't going to go up anymore. This is it. This morning we opened up in the markets, the yields, instead of going down, which they forced down, yields naturally want to go up. Always remember that. The reason that yields want to go up, that push the stock prices down, is because of the terrible inflation, especially from the new green energy program. And as I say, when you have terrible inflation, you have terrible earnings, you have terrible growth, you have terrible everything. So on its own this morning started to go up. They said, oh, no. We got to do something. We got to try to stop it. So all day long, they're trying to stop the yields from going up because the market was going down and it was taking away their gains from Friday that were all fake. Please remember that, okay? The yields. Last thing you got to remember is this. The stock market talks to you, okay? The one thing I love about the stock market, it really talks to you. Now, I'm not a nut. I'm just telling you it does. Here's what it tells you. It tells you that they look at certain things. What does the market look at? Mr. Market looks at the Philly Fed, manufacturing. That's the one they love the most. And it is down big time. They also look at durable goods. Those are down big time. They look at the PCE. Remember the forecast was for 4%, came in 4.5%, too hot. Remember that one? Those are the things they look at. And everything that they're looking at, productivity is a big one. Productivity, man, we suck. We're down to 1.7%. We should be at least 3%. So there's no place you can look for good news. So the only way they can keep the stock market above that 200-day and 50-day moving average is by cheating with that yield. So pay attention to that yield and you won't go wrong. And one last thing I have here for you, okay? One thing that we enjoy a lot is right here, okay? Because this helps us big time. Because along with the yields, we know when to buy. My color-coded chart, I designed this 21 years ago. It works. This is the sweet spot. There's the buy signal. There's the profit signal. See, when you have the buy signal, it matches. It turns green. And then it'll tell you when to take your profit. See, right here, right? Buy, profit taking, profit taking. Then you'll learn with the education package that you'll get with this. It's only $59.95 a month for the color-coded chart and education package. You'll start learning one of the biggest selling signals is what we call a lower high. See the lower high? And the minute it turns back to red right here, that's the sell signal. Right here, execute short. So there's nothing that's easy. We know that. But I can tell you this chart that I've been with for over 22 years is terrific. Okay? And we work with you with this chart. Once you get familiar with the buy and sell signals, and it won't take long, it'll build confidence so you can sell short. You got to learn how to sell short. So it's free for 10 days. Test it out for 10 days. See if you like it, okay? So we're going to do everything we can to help you. I'll see you on my charts, philsgang.com.